Many people try and time the real estate market and find the perfect time to buy or sell. This is next to impossible to get right. So today, I'd like to look at the big picture. Why nothing beats real estate as a long-term investment strategy. You do well if you invest in a diversified manner, in a 401k, for example. But you should most definitely have at least some exposure in your portfolio to real estate. As opposed to paper investments, real estate is considered a hard or tangible asset. What does that mean? It means that rather than a paper asset like a stock or bond, you can actually walk through it. You can touch and feel it. You can add your own personal touch to it. You can add value. It's real, which means unlike a share of a company in the form of a stock, real estate in desirable locations will rarely, if ever, have the risk of going to zero. Another thing is you want to think long-term appreciation. Historically, real estate values tend to rise over time. This is not a get-rich-quick scheme, but it's a get-rich-slow scheme. The steady climb in real estate can be a game changer for your future. In fact, in Orange County, there has not been a 10-year period ever where real estate prices have trended down. Debt paydown powerhouse. Most people think that you build equity only through appreciation when the market is going up, but they forget about debt paydown. Every time you make a mortgage payment, you're actually chipping away at the loan and building equity in your property by shrinking the debt. One day down the line, you will actually own that property outright with no more mortgage payments. Tax advantages galore. Uncle Sam can actually give you a break when you invest in real estate. Mortgage interest and property tax deductions, as well as depreciation, can make it so even that if you are cash flow positive on an investment property, you may actually be able to report a loss for tax purposes. It's basically like the government rewarding you for being a property owner, which is pretty sweet. Passive income potential. Renting out a property can be a fantastic way to generate passive income with limited risk. Imagine collecting rent every month while your tenants cover the mortgage and all the expenses. Welcome to the path to financial freedom. Cash flow that grows. Over time, just like prices, rents tend to trend up. So while your mortgage payment stays the same, assuming that you have a fixed rate loan, it means that your cash flow each month, or at least each year, should increase over time. That cash flow is of course the difference between the rent you collect and your mortgage payment and other expenses. Leverage your way to wealth. What truly superpowers real estate ownership and investment is leverage. There are very few asset classes that actually allow you to use someone else's money to make money. You can control a larger asset than you would otherwise be able to afford with a fraction of the total value as a down payment when it comes to buying real estate. This can actually supercharge your returns when compared to traditional investments. Now, don't put all your eggs in one basket. Real estate adds valuable diversification to your investment portfolio. When the stock market goes wobbly, real estate can offer some stability in your overall investment portfolio. So spread your wealth around and sleep soundly at night. So there you have it. Real estate isn't just a roof over your head. It is a powerful tool to build long-term wealth. It's about appreciation, debt paydown, tax benefits, passive income, cash flow growth, leverage, and diversification. So if you are ready to explore your real estate options and using real estate as a vehicle to build long-term wealth, let's chat. I can help you find the perfect property to jumpstart your journey to financial freedom. Remember that a little planning today can lead to a lifetime of benefits. I'm Jordan Bennett with Jordan Bennett & Associates. Don't forget to like and subscribe for more great real estate tips.